Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the 1 hour chart of gold USD and we can see that gold is standing at 1961. As expected, gold is not showing us any clear direction. Market is still indecisive. As we all know that this week is going to be very volatile because this week is full of events and it has started. You can see here today we have PMI coming up, so market will be volatile during the US session. Tomorrow, day after tomorrow till Friday, we have news each and every day. So beginners, new traders, traders with low capital, please be extra careful and try to close down all your US dollar positions before the news because your stop loss may not work after the news. And if you're not in a position to lose any money right now, then obviously you need to be extra careful. Do not gamble with your capital. Okay, because if the stop loss doesn't work because of slippage, you cannot do anything. And always keep in mind, never forget that this is market. Okay, this is market and we are retail traders. We cannot change the fundamentals. As a result, we are stuck with technicals, and when fundamentals dominate the market, technicals usually fail. If you see a news is taking the market up, then obviously a resistance is not gonna work, and that's a bitter reality and you need to accept it. As a trader, it is very important for you to understand when the technicals are going to work, when the fundamentals are going to work. You need to understand when to use what. Okay, so now let's get started. So as we can clearly see right now, gold is standing at 1961. This is the current market price. And if you look at the chart of dollar here, DXY, then DXY is standing at 102, the resistance here. As we have been discussing, that 102 is the previous resistance, and right now market is standing at resistance only. But if you look at the market structure here, then it looks like that DXY will be breaking the 102 level and heading towards the next resistance of 102.50. And if market drops from the current position here, then obviously the previous support of 101 is still very much valid. This is the support before the news and after news. In case the XY drops also, I think 100.50 will try to provide some support to the market. Let's wait and watch, but keep in mind market may be volatile, so be careful with your positions. Okay, do not gamble. And this is the 1 hour chart of gold. So as we all know, that as we have already discussed also in our previous videos, that gold chart is not very clear right now. If you're a swing trader, if you're a positional trader, then this is not the ideal chart for you. On higher time frame, especially on weekly time frame, okay, it is not opening. Yeah, this is the weekly time frame here, and you can see that market is forming dojis and spinning tops for the last 2-3 weeks. And as we all know, dojis and spinning tops signify indecision in a market. So if you're a swing trader, if you're a positional trader, if you're looking for a big chunk of profit from the market, then obviously the time is not right for you. You need to wait a little longer unless you get a proper direction. So gold is a typical day traders market right now. Okay, so almost all the trading opportunities that you see on the market are good enough for day traders only. Okay, so in this market condition, when you don't have any clear direction, try to trade from level to level only. On the other hand, if you take the example of NES 100, okay, NES 100 is not a day trader's chart. Okay, NES 100 is in uptrend right now, clean uptrend. Just take a buy position and sit. Okay, if you're a day trader, then NES 100 is not the right chart. Similarly, gold is not the right chart for positional swing traders. It's the ideal chart for day traders only. So, and try to trade on the levels. So before news, okay, before news, if you see market going up, then the yesterday's resistance is still very much valid. Our resistance of 1972 to 1973 is still very much there in the market. In case market shows normal volatility, you can expect sellers to be present around this area again. If not a complete trend reversal like yesterday, but at least you can expect a sell of 50 to 60 pips. 72 73 is 72 73, or you can also consider it as 74. 72.74 is the first resistance for the day before the US session. After the US session, you can expect, if market shows volatility, 1982 to 79. Already for us, 1979. Okay, 1979 to 1982 is the second resistance for the market after news. But keep in mind, if market breaks this level, try to follow the trend of the market. But I don't think so market will be too volatile and market will be going for a particular direction, because NFP is the biggest event of the week, so market will be waiting for NFP, I guess. Anyways, we have two resistances, 70 to 74, and then the second resistance around say 1979 to 1982. If you see market going up, observe the market on 1 hour time frame, 15 minutes time frame. Once you'll see the price is reversing from this area, you can go for a sell position, but with proper risk management. Okay, so these are the two resistances on the chart of gold right now. And in case market drops, if market drops, then in comparison to the resistances, the support levels are not very strong right now. The best support of 1940, the best support of 1940 to 42 that we have been discussing is still very much valid. But the problem is that apart from 1940 to 40, we do not have any strong immediate support. See, 1940 to 40 is far away. It's around 200 pips away from the current market price. So in this, around this area, okay, we do not have any strong support level. We have some support around 1950. During the day before the US session, if market drops, 1950 is also a support in the market. And then we have some support around 1954. These are the two support levels on the chart of gold before the US session. Keep in mind, these are not very strong support levels. The strongest support zone on the chart of gold right now is around 1940 only. Okay, 1940, where you can expect a good bounce of 60 to 80 pips. 1950, 54 are still there in the market. You can expect a bounce of 40 to 50 pips. If you see the market is coming down to support and bouncing, you can go for a buy. You can use the 15 minutes chart. If you see the market is taking support, market is showing price rejection from below, will give you the confidence and confirmation that buyers are present. So 1940-42 is the good support, but far away. As a result, before the US session, before the news, focus on 1950 and 1954. These are the two support levels for us. Around 1957-58. Around 1957-58 also we have a minor support, but personally, okay, I will not be going for buy position because I am not that confident. Okay, I don't want to gamble. And see, when we are drawing Fibo from this particular portion of the chart here, we can see that right now market is standing around this level here, Fibo 38.2, where the previous resistance is also acting as support. Around 1957 we have Fibo 50% retracement level. That's why I said that you can, if you want to go for it, you can go for it, but be careful. Personally, I may not go, but there around 1957 we can expect a bounce of 30 pips. Okay, if you take a buy around 1957, try to exit around 1960. Okay, but on the other hand, 1954 seems to be a good level right now before the news under normal volatility, because Fibo 61.8% level is there. Along with that, we also have a trend line. I do not talk about trend line much, but today I can see a clear trend line, so I think it's worth to talk about it. So let's wait and watch how the market reacts. Again, I'll repeat that try to trade from level to level only. This is not a swing trader, positional traders market. This is a day traders market right now because of indecision in the direction. So better wait and watch and trade on levels only. Do not try to enter in the middle of the chart by taking some impulsive trades. Do not gamble with your hard-earned money. Do not be a gambler, be a trader. Okay, so that's all from my side, my dear friends. Bye bye, take care. Please follow proper risk management. This is my analysis. I can be wrong as well. I'm also a trader like you. Bye bye, take care.